Hi all, welcome back to the channel Path to 5 with Alex. Today I'm going to do a portfolio reveal to showcase you all guys what assets am I invested in, and then I'll be doing a update on the transactions that has happened in my specific portfolio. Before we move into the video, quick disclaimer: none of the content in this channel is financial advice. This is for educational and entertainment purposes only. Please consult a qualified professional before making any financial decisions. With that, let's go into the cash flow structure or my current money flow workflow. Uh, so, whenever I get a paycheck, that is automatically distributed into three different bank accounts. One bank account is specifically allotted towards my mortgage payment, so it gets auto drafted every 15th. Then towards the bottom, the bank account is mainly targeted to pay off my credit card bills. So I put all of my transactions on a credit card and I pay that credit card off every month. There's another bank account that is actually tied to my M1 Finance, which is the investment platform that I'm using. I have set up recurring rules in the platform to auto draw $800 every week and invest into my M1 Finance portfolio. So the assets in my portfolio is currently distributed like every $100 I invest, 60% go into growth assets, 20% growth go into dividend value assets, and the remaining 20% go into high yield income assets. Any dividends that I get or any bonuses that I get are reinvested back into the portfolio. So this is my current money flow structure around how I am managing my finances on a day-to-day basis. Quickly going to the projections. Again, I'm starting my account with a balance of $12,000 a year. So this year I have started with $12,000. I'm expected to contribute $65,000 this year. So since I'm contributing $800 every week, that comes down to $41,600, and I'm expected to receive at least $6,000 per quarter as bonus from my work. So that's how, give or take, it comes to $65,000. We will see if nothing drastic happens. I should be able to invest $65,000 this year. So I'm doing a projection of growth in my portfolio as 8%. Again, I know based on my portfolio allocation, it's pretty conservative. And I'm expected to receive at least 4% dividend yield, or I'm able to generate that much income. So my estimated income is 3,300, and I'm just showcasing my portfolio values with both drip and without drip. So I'm expected to have at least $86,000 by end of this year, with an estimated monthly income of $277. So I'm just tracking my monthly income just to make sure where in my specific journey can I comfortably cover my monthly expenses, just to make sure I'm on track or not. All right, and my current financial independence number is I'm projected to should have around 1.25 million by 2036, which is 10 years from now. Uh, I wanted to fast track this journey, but at least for now, 2036 is where I should be hitting my 1.25 million number, provided nothing changes when it comes to contributions. Right, going into the portfolio. Again, I use M1 Finance for my investment. Again, they have this pie functionality where you can select your funds and you can predefine the target percentage for each of the allocation. Going back to my cash flow workflow that I've showcased earlier, my portfolio 60% is targeted towards growth. So in this case, I have selected funds like SPMO, SCHC, and VGT as my growth funds. Again, these are growth ETFs. Again, not financial advice. Do your own research before you select or invest into any of these funds. But I have predefined a pie in M1 Finance where defined that 20 percentage should go into SPMO, 20 percentage should go to SCHG, and 20 percentage should go to VGT. So that contributes 60 percentage. So every $100 I invest, $60 immediately goes ahead and get invested to these three funds. And when it comes to the dividend value, I have selected CGDV. This is a capital group fund, again focused on dividend value. That's how that 20% I have predefined those target allocation. And the rest 20% is equally distributed to four high yield income distribution funds. One is a covered call ETF from Goldman Sachs that they are doing a covered call on Nasdaq. Again, 5% I have a target allocation towards GPIQ. 5% goes to BTCI. Again, it's a fund from NEOS targeted towards Bitcoin exposure, and they gets 5%. So every $100 I invest, $5 go to BTCI. Then I have a WPay. Again, this is a ultra high yield income distribution fund from Roundhill. 5% go to WPay as well. And the remaining 5% goes to T-SPY. Again, that's a Tap Alpha SPY offering covered call that is expected to get 5% allocation in my portfolio. So these are the 8 holdings in my portfolio. And M1 Finance is projecting that with these 8 funds, my dividend yield is 4.63%. And my expense ratio is going to be 0.27%. I know it's a little high when it comes to low cost ETFs out there, but I believe these 4 income funds is actually pushing it to 0.25. Again, as you can see, at least the portfolio to me is pretty diversified. Again, I want my portfolio in its early stages to be heavily aligned towards growth. And once I hit or once I get close up to my financial independence number, I might adjust these weightings accordingly. So that is why I like M1 Finance a bit better, where I don't have to sell anything. I can come in and just change the target allocation percentage from let's say I don't want to put too much into growth. I can reduce it to let's say 10%. So the portfolio gets rebalanced accordingly. I don't have to do anything manually to do the calculations or selling or buying out of funds. So towards the right, what you see here is my portfolio balance as of January 10th. Again, you can see some of those funds are not met those target allocation values. For example, you can see CGDV is right now 18.8% of my portfolio, but my target allocation is 20%. So I believe moving forward, whenever my next transaction comes over, this fund gets purchased and it tries to meet that 20% goal. A couple of other funds are also not below their threshold that I've set, and this gets rebalanced as I move forward with this journey. But as of now, my balance right now is 12,840. This week I have invested around $800 just from my monthly recurring transfer basis that I have displayed in my money flow workflow. Right, going to the monthly projections. Again, I'm just tracking my portfolio balance, starting balance, ending balance, and my dividend income. So again, I started with $12,000 based on $800 per week. That comes down to $3,200 per month, and I have transferred an extra $55. So I'm expected to have around $16,277 by end of January. If the market stays the same or it grows, we'll see where it ends up. And I'm expected to make at least $76. That can change depending upon the yield. We'll see where it'll end up. But at least I thought of tracking it from a monthly perspective. Again, the calculations are based on getting an annual modest growth rate of 8% and getting a dividend yield of around 0.5 percentage. I'm also tracking the income each of the CTFs pay for the dividend from a weekly perspective. Again, what you see on the screenshot is are my transactions from this week. Again, $400 every 2 days I'm transferring per week into this portfolio. So my recurring transfers are set up to have $400 on every Tuesday and every Thursday. So just to make sure I'm dollar cost averaging into the portfolio at regular intervals. The first $400 came in. It purchased, I believe, GPIQ and TSPY. And I already got the dividend income for TSPY and GPIQ since they're 0.50 and 0.58. It's just minimal because my portfolio had very minimal amount of these two funds. I just recently added these two funds into my portfolio. When it comes to WPay, I have around 1,200 or so that is allocated to my portfolio. Yeah, it's around 1,200, $1,115. So it's a weekly pay ETF. So every week I get paid around $10 or so. And again, all the dividends are reinvested back into the portfolio, right? Again, Thursday came over, $400 was again deposited via recurring transfers and combined with the dividends, again, went ahead and bought those two funds to make sure my portfolio is meeting those allocations that I've set. So I just make sure I'm tracking this from a weekly perspective as well, at least the income. Uh, WPay again is a high yield weekly pair. So every week I'm expected to get at least $10.81. Again, it can deviate depending upon the strategies. Uh, BTCI again, it's not a weekly pair, it's actually a monthly pair. So let me change it here. This is a monthly pair. GPIQ again is a monthly pair. TSPY is also a monthly pair. So CGDV again, this is a quarterly pair. I believe rest all of those funds, including the growth funds, are they have their dividend distribution on a quarterly basis. Again, I don't expect much dividend from these three funds because their objective is not to pay dividends, but for mainly there for growth. But I just kept it there for tracking purpose. So these are the main 5 funds that I'd be expecting some dividends or income, just to make sure I can track it once throughout this year. And so far, my weekly total is $12.09. And once we end the month, we'll see if we hit $70 of the monthly projection. We at least do we hit the $76 or not? We'll find out. That's it from a portfolio update and weekly transactions update. A couple of websites I wanted to point out that I use for my research. One is totalreturns.com. And I feel like this is a pretty great website that you can use to see how the funds that you are going to invest in, what's their past performance and their returns are. In this case, I'm just tracking VGT, GPIQ, and VO, and it's pretty accurate when it comes to showcasing the total returns. VGT, as you can see, 82%, 84 overall return, and GPIQ, even though it's a covered call fund from Goldman Sachs, it's still closely tracking the S&P 500 fund. Woo! So I'm pretty surprised with that. Again, it gives you different projections, right? So when it comes to dollar amounts or percentage that you are looking for, when it comes to total return, VGT, if I had invested $10,000 on 2023 October 26, I would have grown it to 18,284, which is exactly 82% is what they are targeting. GPIQ also is pretty close to Woo. That's another reason I thought of adding GPIQ so that I can generate income as well as closely track S&P 500 as well. And they have this cool feature of projecting their annual returns, past projection of their annual returns, and You can see VGT is a strong performer. Again, the only drawback to it is it's technology sector weighted, so it's pure technology, and technology is on a tier for the last 5 years or so. So no wonder why VGT is outperforming Woo here. Again, they have good metrics around drawdowns, right? What's their worst drawdown in that time period? I believe April when the tariffs hit, BGT went down 28 percentage, GPIQ 21, and S&P 500 is 19 percentage. Uh, so it's a risky fund. That being said, the rewards are also better. One other website that I use is Dividend Channel. Again, very good channel when it comes to seeing your total returns. In this case, I can use GPIQ, and I maybe since it's a covered call on QQQ, I can just use QQQ, and I can see the average total return. Right, of course, QQQ is going to be better. Because it's not a covered call, so the upside is not capped. GPIQ being the upside cap, still it returned pretty good numbers, right? So that's the main reason I have selected GPIQ as part of my portfolio. I know there are different other funds, QQQI, TDAC from Tap Alpha, they have different funds. So that's another cool thing, right? So for example, if I want to compare GPIQ with QQQI from NEOS, I can come here and just quickly compare it, and you can see here GPIQ is outperforming QQQI here, right? If to making sure the dividends are reinvested, even though if it's not reinvested, still it's outperforming, not by a lot, but still a percentage. One of the other websites that I use for my back testing purpose is Portfolio Visualizer. Again, none of these websites are any promotions. These are websites that I just use for my analysis. Again, this is where you can give or mock up your portfolios or how much percentage that you are planning to allocate to each of those funds. And you can just visualize or at least back test how these portfolios would have performed if you would have invested, let's say, 10 years back. Right. So, for example, if I just quickly delete, I think WPay might be skewing the data here. But let's say if I just go ahead and put which one is the oldest? Yeah, 20 percentage on GPIQ here because the other funds are pretty new. Not that new, but pretty new compared to the other funds. So just want to make sure it hits 100 percentage. And that will give me, right, if my portfolio is equally allocated between VGT, SPMO, CGDV, and SCHG, I can expect an annualized return of 22 percentage. And of course, these are growth oriented. That being said, the drawdown is also going to be bigger. So I can expect an 8.4 percentage. But if I just add GPIQ, again, you can see the growth is still about 22. It's pretty close to 22.8 as well as 22.2. And the drawdown is still 8.5. So it's pretty much the same. And I have also added Bitcoin, right? If I bit just for tracking purpose, my annualized return minus 6.4 percentage, and the drawdown is pretty crazy, being Bitcoin. Again, this is the data from Jan 2025, just the last year. So depending upon the funds that you use, I believe IBIT only has data for the last 1 year. So that's why the data is skewed towards the last 1 year. But if you need, your data to go long back, let's put it 0. Let this put this one 0 as well. Let's put everything 0. Just do one portfolio. Analyze. Now you can see your data across 2 years or 3 years. Again, you can adjust it by going back and testing from when you wanted to test it. You can adjust all of those settings here. But looking back, right, if I have been moderately equally allocating all of these funds with this 25 percentage, my average return annualized is 30 percentage now. right? Pretty crazy. Right. Again, this is comparing against S&P 500, right? So S&P 500, if you have invested $10,000, it will be 18,000. Still, 22 percentage growth versus having 25% equally allocated to these funds, it would have get you 30 percentage. Your growth is $4,000 more in the time period. That's pretty crazy. So yeah, again, not financial advice on these funds. Do your own research, but these are the ways that I usually do my research. Hope this was helpful. Again, moving forward, I'll be doing this weekly updates regarding what how much I received when it comes to dividend income and how much I invested on a weekly basis. I'll be updating these trackers every week. If you're interested in this sort of videos, please feel free to like and subscribe and join this journey. That being said, thanks all for watching this video.